Ed Ponsi here, calling you from the middle of the storm here on the east coast of the United States. We have a pretty intense little storm going out here, but it's good to be here. Good to be with you. Hope you're having a good day. All is well here. Have a particular currency pair that you'd like to take a look at, please feel free. Let me know and we'll take a look at it. Okay, so let's get down to business now. Just keep in mind, right, that we are just a few hours away, really not just a few hours, we're one day plus a few hours away from the FOMC meeting. Pretty much a 100% chance of a Fed rate hike coming up at this Fed meeting. In addition to that, we are expecting now an additional very good chance, a 50% chance of a Fed rate hike in June. So we think we're going to see several Fed rate hikes coming up here. The perhaps accelerated pace of rate hikes. So just keep in mind that many traders are going to start heading to the sidelines ahead of this Fed rate hike. I would expect that the markets are going to be a little on the quiet side for several reasons. We are having a snowstorm in New York today. New York accounts for about 15% of all Forex trade, and we're right in the middle of the New York session right now. We're right in the heart of the New York session right now. So that could affect volume. FOMC tomorrow could affect volume as well. And as we mentioned during the first segment, we have an election tomorrow in the Netherlands. We have Article 50. Probably not going to be signed this week, but we do have news continuing to come out on Article 50. Of course, Article 50 necessary to execute Brexit. Let's move on. So we're going to move away from the euro at this point. We're going to move into some of the other pairs. Of course, Carlos, one of our regulars here in the room, is trading Aussie New Zealand. This continues to move right down. Right now we have what appears to be a doji in here. But that's a beautiful chart. We've got the pullback and the rally out of there. The textbook flag pattern looks like this is going above 110 and made it through resistance without too much trouble. New Zealand very quickly. Now today's Tuesday. We know that every other Tuesday is the dairy auction. That is not today. That was last week. So next Tuesday will be the dairy auction. This New Zealand dollar appears to be finding some support in this 69 area. However, so it has stopped falling. It fell pretty much 300 pips nonstop from 7,200 to 6,900, and now it's finding support. So does that mean it's a buy? Could be. It's a little bit risky down here, but I will tell you this, it still is a carry trade, although it's becoming less of a carry trade all the time against the dollar. Keep this in mind. As the Fed continues to raise rates, shorting the dollar pays less and less interest, right? And as I said earlier, they're probably going to raise rates not just tomorrow, but also in June. So keep that in mind, that shorting the dollar pays less and less interest. This is one of the reasons why the dollar has been so strong, because traders who are doing carry trades, they don't think about short term, they think long term. And the long term, higher interest rates means carry trades are less attractive. So they think, well, we're not going to short the dollar long term because they're raising interest rates. So who's not going to raise interest rates? Japan. Let's short Japan, right? So they're much more likely to pick on the Japanese yen than they would be the dollar. Now, but strictly from a technical standpoint, this begins to look a little bit more attractive because it's come down so far. And this is a perfect example of something that I talk about quite a bit. You see how this went up and it went up fairly quickly. When they go up quickly, they can come down quickly. That's because there's not a lot of support in here. It did just basically ignore a support level here. See how this acted as resistance? It bounced, 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 bounced across this line. This line should have acted, that was resistance, so it should have acted as support. It didn't. The price cut right through it. But for the most part, there was not a lot of support and resistance on this rally. This rally went from 69 to 72, really 73 fairly quickly. And when they move up quickly, they can move down quickly. The same thing happened here. This moves straight down from 72 to 69. So history is repeating itself on this chart. When they move in straight lines like this, they don't really have time to create support and resistance levels. And this means that the area is easy. It's easy for the price to move through that area quickly again in the future. Whereas if it takes a long time for the price to move through an area, then it's difficult to get through that area. Price has memory. It's not even, there's a saying in technical analysis that price has memory. The truth is, it's not the price that has memory. It's the participants that have memory. Look at this area right here, for example, 72. If New Zealand ever gets back up to 72, and it probably will, right? It might have a tough time getting through 72. Because there's a lot of, why? Because there's a lot of people who recently placed trades in here. The entire month of February, New Zealand US dollar, Kiwi, was battling at 72. Now, the shorts won and the longs lost. The shorts are happy. They're probably cashing in because this makes sense. There's support down here, and it's a sensible place to take a profit. But if you went long up here, you should get out, and hopefully they did get out. But let's imagine someone who went long up here and added to it, and they're just hanging on. How do they feel right now? Well, they're in pain, obviously. What are they going to do if the price comes back up to 72? What are they going to do if the price comes back up to this area? They're going to get out because that's their break-even point, right? Because it's funny. There's actually terminology for this in psychology, in behavioral finance, because there's such a strong compulsion, really, among traders who are losing money, who just want to break even. It's very strong across human nature. And once you begin to understand that, then you identify it in your own behavior and you can defeat it in your own behavior. It becomes much more easier to conquer that within your own behavior once you understand that it's normal and that everybody experiences it. So if we get back up to this area, there's going to be a strong tendency of people to sell. If they bought it up here and if they're still hanging on, they are going to sell. And that's why this area becomes resistance again. It's human psychology. It's human nature. Okay? And that's very predictable. But what if that area wasn't there? What if it's just a straight line? Right? If it's just a straight line, then there's nobody there trying to break even. There's no, there's no support, there's no resistance, and the price can move very quickly. I do not think the price will move very quickly through 72 on the way back up. So if I were a buyer here, and believe me, I'm considering it, I just want to see some positive price action. And there's no way I'm buying this ahead of ahead of the FOMC. Non-farm payroll already happened on Friday. FOMC is tomorrow. Why am I waiting for the FOMC? I saw something very interesting on Friday's non-farm payroll. Something I find fascinating. that is this, that the dollar became weak on a very strong number. I know I mentioned this yesterday, so I'm not going to dwell on it. I'm just going to touch on it. Look at that. The dollar got crushed on Friday on a really strong non-farm payroll number. That's very counterintuitive. Now, tomorrow, the Fed's going to raise rates. I think that's a done deal. But we may get a hint that the Fed will raise again soon, or not. But let's say that that Ms. Yellen, in her speech afterward, which is really the market mover at this point, right? I don't think anybody will be surprised if the Fed increases interest rates tomorrow, correct? Would you be surprised? I won't be surprised. I promise you I will not be surprised. However, if the Fed raises rates, and if they hint at raising rates further, don't you think the dollar should strengthen? Let's say they hint that maybe they're going to raise rates, they're going to accelerate the pace of rate hikes. Don't you think that the dollar would strengthen on that news, or it should strengthen on that news? I do. I think that's worth a little dollar strength. But what if the dollar got weak instead? What if traders sold into that news instead of buying into it? That would mean it would be just like Friday. They're selling into good news. And that would be like the market is trying to tell you something, right? The market's trying to send a message. And that would be the green light to sell dollars, right? Find the strongest thing you can find, probably not New Zealand, not Great Britain. Find the strongest thing you can find and buy it against the dollar. Maybe gold. What's the strongest thing against the dollar right now? It's not the pound. Pound is hitting multi-week lows. Its lowest point in about 2 months. New Zealand is at its lowest point in about 2 months against the dollar. Aussie's holding up a lot better than the pound. Aussie's holding up a lot better than the Kiwi. What else have we got? Euro's holding up pretty well. Euro and Aussie, not bad. Canadian dollar getting pummeled here as oil is weak. Swiss franc is kind of intriguing to me because I'm thinking with all the political turmoil in Europe, this could become a winner because Swiss franc could become a winner because of all that political turmoil. It's possible. Dollar yen. Nah, I don't know. To me, this looks like a rounded bottom. Look at that. A big smiley face, right? Look at that rounded bottom. So the yen is not that strong really against the dollar. It was, but that looks like it's over. So I think I'm leaning toward Swiss franc at this point. Not a great chart. It's not like I have a whole lot of choices here. Might go with euro. Man, I hate to go with euro though, with all the political turmoil. But euro has the flag set up. It's funny. The euro chart, euro looks better than the Swiss franc. Here's what I mean by the flag setup. Put a parallel line here. And there you see it, right? There's your flag. So 105.50 to about 107. According to this, it looks like it's going to about here. Just eyeballing it, it's going to somewhere between 107, maybe about 107.50. A lot of resistance at 108. No way do I place this trade prior to FOMC, but this looks pretty bullish for euro. And the dollar is pounding everything else out there, but euro actually looks pretty bullish. It's amazing with all, it just goes to show you. The fundamentals look kind of scary. But the technicals say the euro's a buy. Isn't that crazy? Against the dollar. That's amazing to me. Anyway, this chart might look completely different tomorrow. So be careful. There's no way that I'm entering this trade. Normally we do a lot of trade setups in this room. You'll notice we're not doing a lot of trade setups today. Why? Any trade setup that you do today, that trade has to be closed in 24 hours. I'm not planning on holding anything into this FOMC. That's just poor risk management. If you're going to, unless you have a very long-term trade, if you have a very long-term trade, that's different. But short-term trades, you can't allow your short-term trades to drift into. Like the Aussie-New Zealand trade that we've been talking about. And, Carlos's Aussie-New Zealand trade is a long-term trade. I don't really see that being affected by the FOMC all that much. You might see some ripples there. But frankly, Aussie-New Zealand is probably not going to be greatly affected by the FOMC. But something like Euro USD would be anything involving USD directly is going to be greatly impacted. I'm not going to enter that trade 24 hours ahead of the FOMC. Right? So because this could change dramatically. Okay. All right. We do have a question coming in there. And by the way, I'm going to answer Carlos's question first. I have a question from Ankit Amin Yen. Could you elaborate? I mean, did you want to look at dollar yen or yen against any of the other pairs? Ed, can we look at New Zealand USD above 69.90s? Oh, sell it above 69.90s and buy it above 67.50s. For now, I'm doing nothing with it. What do you think? Let's take a look at that. It does look intriguing down here. What Carlos is looking at is this. He's saying under this line, it's a sell. And above this line, he's a buyer. But I got to go lower. Hold on. Carlos wants to buy all the way down here. So he's looking at weekly. support. I see what you're saying. I see what you're saying. There is more. There's a lot of support. I see support as being a little bit lower, like maybe 6,700 to 6,750 area. Right? There's a lot of support. Man, but this just goes to show you, looking at the weekly chart, if this current area on New Zealand breaks, on Kiwi breaks, it could go to 67. Absolutely. Wow, that's some perspective there. That's why I tell you, man, that's why you got to use stops. I mean, if you are thinking about buying this in the 69 area, man, you got to use stops. Man, that could go to 67, and it has the momentum too, right? Definitely has the downside momentum. And looking to sell it up here. Now, okay, I think I see that. Now, first of all, looking to sell it up around 70 because look at this was support. So it should act as resistance. Right? You look at those candles, look at that huge bounce off of about 70, let's call it. And another big bounce here. And a series of bounces here. I see 1, 2, 3 weekly bounces here. And really before it was support, it was resistance several times in here. So 70 is kind of a key number, or at least it was in the past. And traditional technical analysis will tell you that once that is broken, it won't work anymore. And the problem with that is, anecdotally, I can tell you that many, many times I've seen these broken and then they start working again, which goes against everything in traditional technical analysis. But it seems to happen a lot, especially in Forex. So yeah, I definitely agree with Carlos on his sell point and on his buy point down here, because if you look down here, you can clearly see huge bounce. Carlos is talking about being a buyer down here at 67. You can clearly see a huge bounces from the 67 area as well, right? Several huge bounces from that area. The last 2 times we were in that area, there were massive bounces from that area. So yeah, absolutely. Carlos with a good eye. Carlos looking with the longer term charts too, which I find very refreshing, right? Because most people are looking at, shorter term. And but you can't catch the big fish if you're fishing for minnows. It's hard to catch. It's hard to reel in a big fish, right? Mr. Amin says, actually, I want to look at dollar CAD since oil is sliding down after the OPEC monthly report. Let's take a look, and we'll take a look at oil first. Look at that. Look at then this is the weekly. Oil was so sleepy for so long and then just fell off a cliff. But there's a lot of weekly support coming into play a little bit lower, right? Looks like oil's going to about 46. And it's currently 47.5. So oil looks like it's heading for 46. What about dollar CAD? Oil has to go a little lower. Dollar CAD looks like it has to go a little higher. Now, I'm cutting through the wicks a little bit here. Right now, dollar CAD just under 135. It looks like it's going to go above 135 up to about 135.40. So maybe to 136, maybe to 136. but I don't think it goes much farther than that in the short run. Because there's good support on oil. There's very good support on oil, just a little bit lower, about $1.50 down from here. So I think dollar Canada goes just a little bit higher. Here's the thing. If support breaks, dollar Canada could, if support on oil breaks, dollar Canada could, sorry about that. If support on oil breaks, dollar Canada could break resistance. But one more thought about that, if I may put it out there. If just remember that Canadian dollar is also being affected by price of metals, which are all being hammered. We're all being hammered. Take a look at gold. Go back to the daily here. Gold is just having a rough ride. Silver, rough ride. Copper, rough ride. All the metals are just getting hammered. So it's not just oil. It's commodities in general. And my belief is that a lot of this has to do with strong dollar. $ DXY. That a lot of the pain you're seeing in commodities has to do with this chart. Now, the strong dollar, much of that has to do with the fact that the dollar has been the only major currency, and the Fed has been the only major central bank that has been raising rates. And not the only major one, but I'm just talking about the G7, the G8 at this point. Out of the ones that we trade. People are going to say, well, India's a major central bank, China's a major central bank. Yeah, we don't trade those, though. We don't trade them for various reasons, right? But Europe is not raising rates. Japan is not raising rates. Great Britain is not raising rates, right? And those are liquid currencies that we trade. Okay. Now, none of those countries are talking about raising rates, but is it really that far into the future? I don't know how far in the future before Europe raises rates. If I had a guess, I would say it's not this year. Is this going to form that head and shoulders ever? I don't know. I want to see what happens tomorrow with this FOMC meeting. If we get a big green candle or if we get a big red candle. If they raise rates and talk about raising rates in the future and we get a big red candle, I'm going to start thinking about shorting dollars. I don't know. I wonder how we traders would consider, this is from Carlos, I wonder how we traders would consider what tech analysis represents to us when it comes to considering a trade. I'm referring, Ed, when we talk here about the meaning of risk reward, the measure of probable trades, and so on. I think we should stick to limited definition of a set of rules that allows us to communicate with a chart similar to what grammatical rules represent the language, but with enormous limitations. It's almost impossible to define the potential of a probable trade. What do you think? I think you're right. I don't disagree with what you're saying, and I have to admit, look, there are times when I'm just allowing stream of consciousness to take over, and maybe I'm being a little too broad, and maybe I should just allow things to just take their course. But That's my thought process is, I have to allow my in other words, I always feel that we will always be able to out-trade a computer because the computer doesn't understand that that the dollar was rejected on good news on Friday. Like that's a subtlety that maybe computers don't quite understand yet. And that's maybe the only reason why we still can out trade them, or we can still make money in the market is because we can still understand these subtleties that they don't understand. And I guess it's just ingrained in me because that's what I was brought up with in trading, is looking for these type of things, is that, my God, this stock had horrible earnings and it was down 10% and now it's green by the closing bell. We should buy it at the open tomorrow. Stuff like that. It seems to have worked well for me over the years. And anyway, but I get you because I don't want to overcomplicate things at the same time. All right. Anyway, well, listen, gang, I've already overstayed my welcome. I'm out of here. I'll see you all on Thursday. We'll recap the FOMC. Just be really careful tomorrow. Be careful always be careful. It's going to be interesting day tomorrow. So I'll see you on Thursday. Take care.